Hey everyone, Kevin here. I have an urgent update on the downsides of mortgage forbearance, and this video is going to be dedicated to breaking those down. I wasn't expecting or planning to make this video. This information urgently just broke to me, and I want to share it with you as soon as possible. I was planning on making a video on 3D tours and starting a virtual tour business, but I guess that'll have to be tomorrow because this is top priority. So last week I made a video talking about the $0 mortgage. Basically, your ability to get mortgage forbearance, which means you kind of don't make your payments for 90 days all the way out to potentially 180 days if you own between 1 to 4 units. There are different rules if you own more than 5 units. There are only specific mortgages that apply, and there are specific ways you can pay this money back because you'll still owe it in the future, but I did break down all of those details in the prior video. This video is a follow-up to the prior video, highlighting the downsides to you, especially some new downsides that are quite shocking and honestly, really bad. So let's start with trap number 1. There are 3 main traps and potential dangers when it comes to mortgage forbearance. The first has to do with how are you going to pay the money back? And this is where banks, while initially they might act like your friend, hey, no problem, you need mortgage forbearance? No problem. You know what? For the next 1, 2, and 3 payments, why don't you just go ahead and pay us 0? Sounds good, right? Almost like the bankers are our friend, as if that shouldn't be a red flag up front. But anyway, the big problem comes in with how they set us up for repayment. Unfortunately, this is the first trap. Banks are saying, all right, we'll give you 3 months of forbearance, but at the end of these 90 days, at the beginning of the 4th month, we want you to pay us month 1, 2, 3, and 4. So now you have to make 4 mortgage payments in 1 month. That's ridiculous. If people aren't working and we're having less income come in because our tenants aren't paying or whatever, this makes repaying everything in month 4 next to impossible. In my prior video on this, I mentioned that the best repayment term is adding all of these 3 payments to the end of your loan, because you're basically taking money that you owe today and kicking it down the road 25 to 30 years. That's good. Like time value of money-wise, finance-wise, really smart move. But paying it all at the beginning of month 4, that A, sucks, and B, is going to be relatively impossible. So a lot of people are responding like, I can't do that. There's no way I can make that payment in month 4. And here's where the banks are screwing people. They're acting like our friends, saying, oh yeah, go ahead and stop making payments for 1, 2, 3. Sounds good, everything's peachy. Oh, you don't think you'll be able to make all 4 payments in month 4? Call us then, we'll take care of you, promised. Yeah. Well, here's where the trap comes in. The way forbearance works right now is you're not supposed to be charged any fees if you take those 3 free months essentially, and you're not supposed to have your credit affected. So it sounds good. It sounds like you can pay $0 for your loan for the next 3 months and then figure out repayment later. That sounds good. But the problem with figure it out later is the banks might be able to screw you at that later part. See, here's what can happen. Let's say the beginning of month 4 comes around and you call up the bank like they said, and you said, all right, I didn't make my payment for the last 3 months. You told me to call you at the beginning of month 4. I'm ready to talk now and say, hey, like, I can't pay you 4 payments in 1 month. Well, this is where banks might say, either 1, okay, we'll give you another 3-month extension, that's the other 90 days, which that would mean you'd have to pay 6 late payments and your 7th month payment all in one time. You're just basically throwing yourself deeper and deeper into the hole without having a repayment plan. So that's not ideal. You gotta have a prepayment plan before you even agree to do this. But if you get to this situation, and this is why this is a trap, if you get to this option where you're like, oh crap, okay, I didn't make my payment for 3 months, now I wanna talk about solutions, like how are we gonna repay this back? They might come at you and say, all right, here are your options. Let's put you down the normal path of a struggling borrower, which means you open up the door to potentially either 1, a loan modification, or 2, they want you to sell the property short, or 3, they threaten you with foreclosure. So here we are thinking foreclosures are halted and, no effect is gonna happen to our credit and there won't be any fees or penalties. But if we agree to take forbearance and we don't have proper repayment terms established up front, and they just say, call us later, they could screw us into bad choices, which are loan mod, short sale, or foreclosure. And guess what all of these typically do? They screw your credit and they cost a lot of money in fees. So basically, while banks right now might be saying, oh yeah, okay, all right, take the $0 mortgage for 3 months. It's okay. We're your friend. If you have trouble later, no worries, call us. They could be backing you into an ugly corner where your only options down the road, when you're in an even worse situation, are all bad options. Trap number 1 sucks. How do you avoid trap number 1? Only way you avoid plan number 1 is with a written payback plan. A written payback plan that says you will either pay back in installments over, let's say, the next 24 months or the next 18 months or something like that. Something that you can actually agree to and you know you'll be capable of doing. Divide the payments out, the 3 months you missed, divided by 18 or divided by 24, whatever it is, and see if you're comfortable with that. Don't agree to something you're not comfortable with. Or alternatively, you have those payments added to the end. Unless they agree to give you option 1 or 2, I don't think I would take mortgage forbearance. Now, I know for some of us this might not be an option, but I would push really hard for 1 or 2. Even if that meant I had to call them every day and fight tooth and nail, but I would want a written payback agreement where I either have installments or they add my payments to the end. I do not want call me later because that's gonna screw me. I also want to make sure that I'm documenting that my credit will not be affected and that I'm not going to get hit with any kind of crazy fees or anything at the end of this. So get these things in writing. Very huge. This is the only way you're going to avoid getting into trap number 1. But there's another crap trap. Number 2. Trap number 2 is unlocked when you go down to that like button and Thor's hammer gavel it. Okay, let's just get into number 2. But while you're down there, you could also check out the free 2 stocks you could get with Webull and my discount coupon code for the real estate investing course and the property management course. So check those out. Some new lectures coming out on crisis style investing and making money from the panic. All right, trap number 2. And see, that's actually what people like about my courses is I keep updating them. I keep adding lectures. I don't just make a course and slap it up and forget about it. It's living and breathing every single day. So trap number 2 has to do with qualifying for new debt. This is not so good. Right now, we already know that the entire lending industry is tightening dramatically. Credit lines are getting frozen. Approved credit lines are getting canceled. Jumbo mortgages canceled. FHA borrowers are getting screwed with higher requirements, more stricter, more stringent requirements to get into a deal. Bad. A lot of bad news happening in lending right now. A lot of conventional loans are still chugging along, but rates have been in flux. Even though they're supposed to be lowered, they're not. It's a mess out there right now. But if you want to apply for a credit line, a refinance, or a new loan, and you accept forbearance, you might no longer be able to qualify. That's because, as I predicted in my video last week, it's just like shocking. I wonder if I'm partially to blame for this because I feel like the mortgage loan servicers saw my video on the $0 mortgage and they're like, Kevin, you suggested we have a form about forbearance. Well, here you go. We made a form. I'm like, crap, what if I'm to blame for this? But anyway, the lenders are now, a lot of them, they all have a different form, but here's the form. Here's exactly what some lenders are asking for now. They want you to sign this attestation, which is, I worried they would do this, and sure enough, they did. They want you to initial and sign this attestation that says you have not taken on any new debt, which that's understandable, and you have not entered into any kind of forbearance terms for a loan. You're not late, you're still current, everything's still normal. And I haven't seen what happens if you say you've entered into forbearance, but my guess is because it makes sense. A lender who hears you're going through forbearance on one loan is thinking you're gonna ask for forbearance on their loan too. And guess what? You won't qualify anymore. So really kind of crappy trap number 2. So somebody like me who's constantly buying below market value real estate, this is where I put the bulk of my money, aside from the stocks I play with as well, which every time I put money into stocks, it just feels like I'm putting money into a fire pit. Whereas when I put money into real estate, I actually feel like I'm making lots of money. But anywho, killing your ability to get a new loan or to refinance is really bad. I mean, think about this. If you've got an interest rate of 4% on your house right now, and in 2 weeks fix, you might be able to take advantage of interest rates at 2.75% for a 30-year fixed on your house. Oh my gosh, if you had that opportunity, do it. Now, rates right now have trickled up a little bit, or I guess like ticked up, you would say, but they're tentatively trickling back down as lenders catch up with demand. So you don't want to eliminate your opportunity to refinance and lower your rate dramatically, because that actually might enable you to continue to make your payment. A lower monthly payment might make it easier for you to keep paying, and you might not need forbearance in the first place. But again, trap number 2 says if you take forbearance, you might not be able to refinance. You literally might get stuck, and then you get stuck in trap number 2, and then you end up on the door of trap door number 1, and basically you're double screwed. So this is literally turning into a game of playing with fire. And usually we don't win when we play with fire. Like I get this, and there are ways to avoid these traps. Well, basically, there's a way to avoid the first one by having a written plan. There's no way, or likely no way, to avoid number 2. If you take forbearance, bye-bye opportunity to get new debt for a little bit. So this sucks. Now, they haven't done this yet, and I hope I'm not giving them this idea, but you know what would ultimately suck? And this would be like trap number 2.5, is if in the future lenders are like, have you ever within the last 18 months had a forbearance plan or agreement? Ooh. That would be dark. And I mean, that would just be straight up mean, but I wouldn't put it by them, because that means you took your $0 mortgage for 3 months, then you went through the payment plan, or you added those payments to the end of your loan, but now for like the next maybe year or 2 years, you're not able to qualify for new deals. You can't buy those wedge deals in real estate. You can't take advantage of the opportunities with like fixers hitting the market, because more people for some reason are now putting fixer-uppers on the market. Not quite sure what's happening, or if this coffee cup is any hint. I don't know. Just saying, okay? Like, I don't want to be in a trap. We haven't even hit trap number 3 yet, but so far, trap number 2 basically means we're gonna have less people qualified to be able to buy good deals, which in one way is good if you don't take forbearance, because that means there's less competition. But then also, I think there's a greater chance that we're gonna see more foreclosures and short sales because of trap number 1. Now, I don't expect the lenders want to go through foreclosures or short sales, but it's possible, because here's another nasty thing that could happen with option number 1. They back you up 7 payments with forbearance, 6 payments of forbearance, and then they say, okay, you owe everything right now, and then you can't pay it, and they say, well, we'll give you a loan modification. You're like, well, that's gonna screw my credit. Sorry, that's the only choice you have. And then you go, fine, foreclose. And then it's like, oh wait, crap. I still have a house that's worth more than my mortgage is. So like, I don't wanna lose the house. I don't wanna give up my equity. And so now all of a sudden, you're screwed. They have all the leverage against you. You have equity in your property because the market's still up for real estate. And yet, foreclosure is not even something the banks are worried about, because they're like, please, let us foreclose on you. We want your equity. I don't know, like maybe I'm just thinking dark thoughts here, but hopefully this just makes it very, very clear that you need to get your option 1 in writing, and option number 2 sucks. Well, trap number 2 sucks. And here's trap number 3. Trap number 3 is when you take forbearance, you eliminate pretty much all of your opportunities to evict a tenant. See, right now you can't evict a tenant if they don't pay because of the crisis that's going on. But if they start Airbnb-ing out their rooms and they start breaking the terms of your lease contract, you can still evict them. But if you accept forbearance, you're not allowed to evict a tenant while you're under forbearance. You also can't ask a tenant to move, which if you can't ask a tenant to move also implies you can't raise their rent. Now, I'm not suggesting anybody's actually gonna be raising rent during this time. It's possible, but like you start losing some options. But the biggest risk in trap number 3 is some people are doing this because they want to be generous humans. They're thinking, okay, I'm going to enter a forbearance plan so that I can give my tenant a break on rent. In other words, they don't need forbearance because the tenant's still paying, but they're thinking, well, wait a minute. I want to be fair. I want to be ethical here. If I can get forbearance on my mortgage and I could pass 90% of those savings along to the buyer, because you still have to pay property taxes and insurance, then that's great. Like, let me do that. And now everybody's winning, right? I mean, the banks get screwed, but I win as a landlord, the tenant wins, and everybody's happy. But the trap is, if you think everybody's happy, you as the landlord are getting stuck with the worst case scenario, because guess what? Now you're stuck with trap 1 and 2. Repaying it and you can't qualify, at least right now, and who knows what long-term impacts this is going to have. So just because it's not affecting our credit doesn't mean it's not affecting our opportunity to qualify now or in the future. So these are big issues, folks. And this is why if you have not yet joined my real estate investing course, join it. It's the 0 to Millionaire course. It's not that expensive for what you get. You get my entire 10 years of investing knowledge on a platter. You get access to me every weekday at 9 a.m. when the market's open on a private live stream where I can analyze your deals. I can gut check your deals. I can help answer your questions, deal with your scenarios. This is the best time to get a hold of me. So join those. You get the live streams, you get the course. You also get a bundled coupon when you check out for some of the other courses if you want those, but no obligation. Folks, thank you so much for watching. Get your 2 free stocks with Webull and stay safe out there.